Well, security and safety monitoring provider Intelligent Monitoring Group has completed its major acquisition of Wormald, New Zealand, and Red Wolf. Dennison Hambling, the Managing Director of Intelligent Monitoring Group, joins us now. Dennison, welcome to you. Great to have you on the show. So talk us through these acquisitions and what sort of synergies it brings to your company.
Yeah, thanks, Andrew. Really excited to be able to bring the Wormald brand back to New Zealand. It's a really old brand, obviously it's in Australia as well, but we bought the New Zealand component, had been put on the shelf for a couple of years, and the opportunity to bring it back, 1889 heritage is really exciting in the fire space and still a leading business with Red Wolf. Effectively what they give us collectively is more scale in New Zealand, which was already a part of our business through ADT Security, which we bought in 2023, and allows us to really target our commercial and enterprise part of the business. Allows us to sort of extend the advanced security solutions, which sort of AI has enabled us to offer, where we can really perimeter protect people's premises now far more cheaply than the security guard and more effectively as well. And so it allows us to get the mass we need to put some real meat on the bones and get some, what we think will be exciting growth out of New Zealand. The journey on commercial enterprise has been very successful for us in Australia, particularly in the ADT business, where we've taken a pipeline of $0 in 2023 through to last reported through $60 million and growing, quarterly at sort of 20-30% growth rates. And so we think we now have the opportunity to do the same sort of thing in New Zealand.
So Dennison, I note that New Zealand is now a core part of your business. So just how much of it do you see in terms of future growth? I guess if you're focusing in there on New Zealand.
Yeah, I think it's look, we've been opportunistic, so it wasn't necessarily a strategy. I never actually thought I knew there was an opportunity. We might maybe be able to get Wormald one day. I didn't actually think we'd be able to get it, and certainly at the price that we managed to buy it for. But I think fundamentally the drivers are the same in Australia and New Zealand, and that is, new, current modern technology speaks really strongly to enhanced service provision for security and fire. And so, as we roll that out, there's significant growth opportunities. I think, look, opportunistically, it's probably a good time to be coming to New Zealand. My sense here is that the economy has been through a tougher time than say certainly Australia, and feels like it's stabilising coming through. So we feel like we've got a great price, a great extension and scaling of our business, with the right ingredients to now apply the technology that we've been doing in Australia for success. So I think on a growth basis, I'd expect it to at least keep up with our Australian business now, and it hasn't been able to in the last couple of years when we were smaller and didn't have the reach. Now I would expect it to at least keep up with the growth we're seeing in Australia, and maybe given the market position we have here at nearly 500 people on the ground across all of New Zealand, the chance to potentially even grow faster would be my challenge to them.
All right, there's a challenge laid down. Overall, Dennison, what's your acquisition strategy? Is this about targeting both commercial and enterprise security capabilities?
So the first thing is the national basis, and there's been there really hasn't been a leading national provider of security or fire. If you're a large corporate enterprise that you can go to, the idea being one throat to choke would be what one of the customers had said to me. So first point is scale and reach. With your own people, we're essentially a technical trade, a service business. So some scale allows us to train, retain, and employ our own people, which allows you to provide a much more consistent service. I think the second part is in that scale allows you to access technology. As I say, we are, and not looking to sort of overspruik the word, but AI is very positive in what we do. A lot of what we do is based off the use of cameras, being able to look and see and hear, live. And so where we can find places to apply that, the most easy, logical one is security. We can really get growth. So we've been looking to get scale. We've been looking to access, people, relationships, and then apply technology. Our fundamental criteria, though, is sitting at the heart of this business, myself included, we're investors priorly or I guess professionally prior to this journey. So we're certainly very disciplined around pricing, I'd make it one comment. We've got a peer, probably our most likely peer globally is a group called API Group, listed in America, and they have made over the course of the last 20 years over 100 acquisitions, and certainly that would speak to the kind of fragmentation we see on the ground here. I think that the key though is to do a good job, and we're very focused on what we've done now. We're not looking too far ahead. We're opportunistic, but we see a significant scope to build a substantial industrial services business here over time.
You speak of the application of technology, obviously with a focus there on AI. Use that with particularly perimeter monitoring. Do these acquisitions then give you that physical footprint?
It does, and so with Wormald in particular, which covers about 26% of commercial premises in New Zealand, they service and maintain those buildings for fire and fire suppression. Now that fast tracks a conversation that we can have with those building owners. The biggest challenge we've actually got is not the technology in terms of it being created. It exists today. The biggest challenge is actually showing people what the technology can do. And so having an incumbent customer base where we can extend the conversation and show them real value and a much better proposition just allows us, we think, to grow faster and faster over time. So we're very excited about it.
And can you give us perhaps a heads up just in terms of your latest guidance in terms of both revenue and also profit?
Well, yeah, we've focused on EBITDA. We're at an interesting stage now. So we've been doing EBITDA guidance for the last couple of years. I think now with this acquisition, we've also had tax losses and a lot of moving pieces to get to where we are today. We're now starting to try and draw our guidance down to the EPS level. And here, we reaffirmed that we are at least 6.25 cents of pro forma EPS. We're on track in the band of $43 to $47 million for underlying EBITDA for the business we have, and prior to this acquisition. And so we're sort of bridging a little bit between the pro forma and the actual this year, but we've reaffirmed our guidance. I'd use the 6.25 cents though, I guess, to draw people's attention to, because it's a real recurring level of underlying profitability, which we are looking to build off, and will come as we now, these businesses just settle into our P&L, frankly, which just highlights the value opportunity that we have today, but then also the base and solidity of the business we have to grow off.